Hey there, investor. If I were to ask you what the most powerful company in the world is, there's a good chance you'd say, Apple. It's one of the biggest companies by market value, a money-making machine, and a cultural icon. But, as investors, we need to look deeper than just the surface. The iPhone 17 is great, but what really keeps Tim Cook's empire going? Many experts look at Apple and see a hardware company that goes up and down, dangerously relying on just one product, the iPhone. Others see a fortress that can't be broken into. In this video, we're going to take a close look at what really matters for anyone investing in AAPL. We'll break down their strategy, the true strength of their ecosystem, their moat of competitive advantage, their impressive financial health, and most importantly, the real risks they face, from global politics to new rules. If you want to understand the investment idea behind Apple, you're in the right place. Let's get started. Strategy in the Flywheel ecosystem. To really get Apple, you need to forget that they sell phones. Apple actually sells a fancy super-connected ecosystem. The iPhone is like the main star, the sun of Apple's solar system. But the company's power isn't just from the iPhone. It's from how all the other products and services spin around it, making it super hard to leave, like really expensive to switch to another company. Think about it. You buy an iPhone, then you get AirPods, and they just magically connect. After that, an Apple Watch, which needs the iPhone to work its best. When you need a laptop, a Mac just makes sense because everything works together. You can copy something on your phone and paste it on your computer. Your messages and calls show up everywhere. And then, Apple adds the final layer, services. iMessage and FaceTime keep you connected with friends. The App Store becomes your go-to for apps. Apple Pay becomes your wallet. That's the whole plan. Every product and service doesn't just make money. It also, and this is super important, makes all the other products and services even better. It's like a flywheel that just keeps spinning faster and faster, and it's really working. In their latest quarterly report, Q4 2025, Apple's services revenue hit a new high of $28.75 billion, growing more than 15% from last year. That's more money than many big companies make in total. That's the ecosystem making money for itself. The secret weapon, Apple's brain. In-house chips. For years, Apple relied on suppliers like Intel for the brains of its computers. But in recent years, the company made a strategic shift that I think is its smartest move, bringing chip design in-house. When Apple started designing its own chips, like the A series for the iPhone and the M series for Macs, it gained a level of control that no other competitor has on such a big scale. Why does this matter for an investor? 1. Differentiation. Apple can customize its chips for its products. It doesn't have to use a generic chip. It can focus on power efficiency for the iPhone, meaning better battery life, and on graphics and AI power for Macs. 2. Integration. It reduces its own ups and downs. By controlling the chip, semiconductor, the hardware, iPhone Mac, and the software, iOS macOS, it creates a perfect blend that its competitors, who rely on Google for software and Qualcomm for chips, simply can't copy. 3. The future is AI. This is the super important part. Apple is using its chips to build its AI strategy. We saw this recently. Apple announced its new line of chips, like the M5, which has a special neural accelerator. They are building the hardware specifically to run AI right on the device, not in the cloud. This fits with their new Apple Intelligence Suite, which focuses on privacy and helpful features, like writing tools and summaries. By designing its own brains, Apple controls its own path and really stands out from the competition. The 3 pillars of competitive advantage. This all leads us to the most important question. What is Apple's competitive advantage, or moat? We've found 3 main reasons. First, switching costs. This is the strongest one. Switching from an iPhone to an Android isn't just about getting a new phone. It means losing iMessage and becoming the green bubble to your friends and family. It means losing AirDrop. It means having to buy apps again. It means your Apple Watch becomes a paperweight. Apple has made leaving its ecosystem a hassle and expensive. Second, intangible assets. This includes the brand, but most importantly, it's what we just talked about, their design expertise. The ability to deeply connect hardware, software, and semiconductors is an intangible asset that has been built with tens of billions of dollars in R&D year after year. This is made even stronger by their special partnership with TSMC, Taiwan Semiconductor. Apple is TSMC's biggest customer, which means they get first and best access to the world's most advanced chip technology, like the 3-nanometer chips. Third, network effect. This is the App Store. Millions of users with lots of money to spend attract the best app developers. The best apps, in turn, attract more users. It's a good cycle. Developers are more drawn to Apple's platform because its users, historically, spend more money. This tripod, switching costs, intangible assets, and network effect, is what allows Apple to charge higher prices and still gain market share, leading to amazing profits. The bear case. The big risks. Okay, Apple seems unbeatable, but no investment is completely safe. Let's talk about the bear side of the argument. The first and biggest risk is geopolitical. Apple's supply chain is amazing in how well it works, but it's also its biggest weakness. It relies a lot on China for putting things together through partners like Foxconn, and on Taiwan for chips, with TSMC. Any increase in problems between the United States and China, or a crisis in Taiwan, could stop Apple's production in an instant. Apple knows this, and that's why they're rushing to spread out their production. Recent reports show a huge investment in India. In 2024, about 15% of iPhones were already made there, and the goal is to reach 25% by 2027. Importantly, they are moving the production of fancy models there, like the iPhone 16 Pro, showing that they are serious about spreading out. But this takes time and costs a lot of money. The second risk is rules and laws. Governments in the United States, and especially in Europe, are watching Apple closely. They see the App Store as a monopoly, meaning Apple has too much control. The European Union, with its Digital Markets Act, DMA, is already making Apple allow other app stores and open up its system. This directly threatens the App Store's very profitable 30% fee. And the third risk is the consumer cycle. At the end of the day, Apple still sells expensive electronics. In a deep global economic downturn, people will wait longer to replace their iPhones. Apple is affected by what people spend and what they like, and a new game-changing competitor could always appear. The financial fortress and the bull case. Now let's talk about the bull case, which can be summed up in one word: cash. Apple's financial strength is almost legendary. The company makes on average over $100 billion in free cash flow every year. Think about that. They generate $100 billion in cash, which is what's left after paying all their bills and investments. Their profit margins are amazing. For every dollar of net profit, they've historically turned more than $1 into free cash flow. What do they do with all that money? They give it back to their shareholders. Apple has a goal to become cash neutral, which means they want to give back all the cash they don't need to run the business. How do they do this? Dividends, of course, but the main tool is buying back their own shares. Apple has huge share repurchase programs, often approving $100 billion at a time. This reduces the number of shares out there, making each investor's piece of the company bigger. So the bull case is simple: a powerful ecosystem protected by a deep moat that prints money and gives it back to its owners, the shareholders. Leadership and capital allocation. Finally, let's talk about leadership. Tim Cook has really shown himself to be a master at putting money in the right places. He took Steve Jobs' product company and turned it into this powerhouse of an ecosystem and services. Apple's management invests smartly. They went all in on research and development and chip design, which has paid off huge. They also have a strategy of being a premium fast follower. They didn't invent the smartwatch, but the Apple Watch rules the market. They didn't invent VR/AR headsets, but the Vision Pro sets the bar for the high-end category. Their next big investment, as we talked about, it's AI. They might seem behind in the buzz, but Apple's specialty has never been to be first. It's been to be the best at making new tech useful and integrated. Combined with a strong balance sheet and a big program to give money back to shareholders, Apple's way of allocating capital is seen as top-notch. Conclusion and final thesis. So let's sum up Apple's investment idea. Apple's strength isn't the iPhone, it's the ecosystem. An ecosystem protected by a triple moat of high switching costs, special things like chip design, and a strong network effect in the App Store. This lets the company make over $100 billion a year in free cash, which it uses to pay back shareholders and invest in new ways to grow, like AI. The risks, though, are real and getting bigger. Being tied to China and Taiwan for politics is its biggest weakness, and rules getting tougher on the App Store is a direct threat to how much money it makes. The challenge for investors is to decide if the power of this ecosystem is strong enough to stand up to these political and rule-making storms. I hope this deep dive has given you the tools to make your own decision. What about you? What do you think about Apple? Are you a bull, focused on the ecosystem's strength, or a bear, worried about the risks? Let us know what you think in the comments below, and if you like this analysis, think about subscribing to the channel. Thanks for watching, and see you next time.